Welcome back to Trading 360. It's time for the Disruptors. We're watching Wolfspeed. This is a name that George Tsilis has covered for us in Disruptors before. And today, the stock is trading lower. Deutsche Bank did maintain a hold, did adjust the price target. What are your thoughts? The new price target here at 110. What are you watching when it comes to Wolfspeed? This is a name that you've studied before, George, many times.
Yeah, we talked about this one, I think, about a month ago, Nicole, and I think this is a pretty interesting company overall in the semiconductor materials space. And we know that semiconductors stocks, some of the majors out there like AMD, NVIDIA, Micron, all those stocks are down 20 to 30% over the last year. And I think NVIDIA is down actually 40% over the last year. But if you look at Wolfspeed, this is a very interesting company in the silicon carbide material space. Really their focal point in their technologies and materials is power management and conductivity when it comes down to electronics and also radio frequency. And the deployments for their technologies and materials are really about 70% go into auto sales. They also have industrial sales and medical equipment. But the other thing is we have to think about what's going on from a fiscal standpoint. You know, there's an Inflation Reduction Act, which obviously hasn't done much to curb inflation, but part of that Inflation Reduction Act is in a major EV spend bill for about $370 billion over the next 10 years. And I think that's one of the catalysts that is very compelling for Wolfspeed, because one of the things that companies aggressively moving into is power management for EV charging stations, but also for solar inverters. So you can consider this, if you will, an alternative energy play right now. But also, again, a play on what's going on with the fiscal stimulus and the investments this company is actually making in the United States, because they're generating pretty substantive tax credits associated with deploying capex in the United States. In fact, they're building out a new plant in North Carolina, and that was really based upon the bill that was recently passed. So from an analytical standpoint, the analysts versus Deutsche Bank, they actually maintain a hold rating on the stock. But they increased their price target to 110 from 90. But on the street high level, you actually have Evercore ISI. They've got a $155 price target, which is actually, like I said, the street high and an outperform rating on the stock. Now, I went back and looked at the earnings per share and revenues that the company generated last quarter when they reported, and this was again in late August, which also kind of corresponded to the passage of that Inflation Reduction Act bill, which again includes those stimulus spending packages for alternative energy materials manufacturers like Wolfspeed. But the company did report 57% revenue growth. And the other thing is if you look at the next 4 quarters, the company is going to be fully profitable on an adjusted basis. And this is, again, the first 4 consecutive quarters going forward, when you take the summation of them, that they are going to be profitable. And I think that's one of the other financial catalysts that are embedded in the stock price as well.
Yeah, you know, I think it's really interesting here as you're hitting all the key points. You mentioned what we saw with this. We saw earnings, right, back in August, and this popped higher. Right now it's at 116 and moving higher on, I guess, on this Deutsche Bank call with the price target to 110 from 90, a hold rating though. So what are your thoughts on it today as it is trading up about almost 2.5% as we speak?
Yeah, so looking at the stock, after the earnings, the stock gapped higher, and we basically have what's called an island gap that's developed in the stock price. The other thing, Nicole, is if we look at premiums right now, volatility is rather high. We can see the markets are extremely volatile based on look at yesterday's market action. So one of the things we can consider, and I think this is the similar trade we placed about a month ago for September, we could sell some put options and harvest some premium. And looking out in October, you can actually see the 105 put options. One could have sold that earlier today for about $5 a share or $500 a contract. So this basically gives a trader who puts on this kind of trade a yield to strike price of close to 5% between now and expiration of 37 days. But ideally speaking, if the stock does fall to that 105 strike or below, a trader would be assigned those shares at 105, but your cost basis is $100. And that's about 16% below the current price, give or take a percent or two, if that stock happens to fall to that level. So this is basically a trade based upon the fact that the stock may continue to the upside, but it also can pull back quite considerably in the double-digit percent range to still maintain that premium. So we'd like to see basically time value erode and, of course, volatility premium collapse so that credit that we sell up front decays in value, and that's the whole premise behind this trade.
Understood. George, wonderful to see you. Thank you for that. We appreciate it.
You too.
George
Okay.
Tsilis every day with Disruptors right here on 360. Don't miss it.